Mishra Dhatu Nigam or Midhani is a leading manufacturer of special steel, titanium alloys, super alloys catering mainly to three segments: defence, space and energy. The Government of India owns 74% stake and institutions own 15% stake in the company as of 30th June 2022. Now in FY22, Midhani had declared an interim dividend of 1.6 rupees per share and a final dividend of 1.5 rupees per share, which is a payout of almost 33% of profit after tax. Looking at the June quarter performance, revenues remained flattish year-on-year. Value of production for Q1 FY23 stood at 234 crores compared to 122 crores in the June quarter of last year, which suggests better numbers for September 22 quarter. EBITDA was higher by 29% despite flattish revenue growth, mainly due to higher gross profit, lower employee costs partly impacted by higher other expenses. Order book has remained flattish year-on-year, out of which 600 crores comes from space, 300 crores from naval sector, 130 crores from missile, 100 crores from energy and 12 crores from railways and the rest from others. On the back of increasing global and domestic market demand for body armour, vehicle armour and bulletproof jackets, Midhani set up a plant at Rohtak in Haryana. Major construction of Phase 1 and Phase 2 have been completed. Midhani successfully commissioned wide plate mill during FY22, which includes an entire product range including low alloy steel, stainless steel, titanium alloys, super alloys, armour steel among other products. Midhani was outsourcing its requirement for plate mill, and now with in-house production at full capacity, it would save 60 crore rupees per annum. A capacity of 60,000 springs per year has also been set up to manufacture springs indigenously. The company has already received a few development orders from the Railway Board for the supply of springs for coaches and wagons. Utkarsha Aluminum Dhatu Nigam is a 50-50 joint venture of Midhani and National Aluminium, incorporated to set up high-end aluminum alloy production plant at Nellore in Andhra Pradesh. The land has been acquired and environmental clearance and consent for establishment have all been obtained. Midhani has already appointed consultants and tenders for equipment ordering have been initiated. The management expects the plant to be ready in the next 18 to 24 months from the date the equipment is ordered. Now, we expect this plant to be commissioned by June 23 and the full benefit is likely to be seen from FY25 onward. The contribution from Midhani will be around 170 crores in the next 18 to 24 months. Midhani is a play on increased indigenisation in the defence and space segments. Midhani was the primary supplier to the space segment, and post the COVID outbreak and on the back of reduced budget for space spending, higher orders started coming in from the defence space. Supplies to the space segment were comparatively on a higher margin as compared to defence supplies. Now, with orders now based on tendering process compared to the earlier practice on the nomination basis, supplies to defence have become quite competitive. However, being a sole supplier in some product segments like titanium-based alloys in aerospace and defence segment, Midhani enjoys healthy margins. With large capacities on stream, Midhani has started targeting export markets as well. The export turnover for FY22 was 87 crores, which is a 348% year-on-year growth. We expect export revenue of around 150 to 175 crores for the current fiscal FY23. Though the management has not bifurcated the domestic and export margins, we understand that export revenue comes at a decent margin. With capex almost completed, except for the joint venture, we expect revenue growth on the back of a decent order book. Now, in its MOU with the government, Midhani had committed to deliver a revenue of 1,000 crores for FY23. If you look at the stock price of Midhani, it has consolidated well between the range of 160 to 200 rupees for the past 3 months, but it recently saw a new 52-week high of 233 on the 19th of September. So we expect around 17% growth for FY23 and 18% growth in FY24 on the back of stable margins, and therefore recommend investors with a longer term horizon to add Midhani at the current level.